So looking ahead to this week starting November 18th, two big events to look out for this week. That would be the FOMC minutes, and we have a growth outlook release from the OECD. But apart from that, I think the market focus will be the fact that we're now reaching the tail end of earnings season, so it will be a reflection on how the US and other parts of the world have done on corporate earnings front. Obviously looking for the latest rhetoric on the trade war. Things got a little bit more pessimistic towards the end of last week on that. And obviously in the UK, we're focusing on the election and what that means for the British pound. Now, in terms of a general market backdrop, I've just mentioned the pound there. I'll say that we've rallied up right up to 130 in sterling against the dollar. We've pulled back a little bit since there, but I think it's fair to say that there's a fair amount of optimism, if you can call it that the Conservatives led by Boris Johnson can eventually follow through and get some sort of majority in Parliament. Still a bit of a thought about a hung Parliament, but nonetheless, British pound holding up pretty nicely. Other markets to watch out for, really the big one out there is that US indices are at record highs. So that in itself, it's never a bearish thing when you're reaching record highs in indices. That shows that investors are confident in the future direction of stock prices. But something to be cautious of here, and something I'll talk about a little bit more in this video, is that short positioning in the VIX has hit a record low too. Now what that means is that investors are betting on a continued period of low volatility. And when positioning gets this crowded, when everyone in the game thinks that volatility is going to stay low, that's typically the point in which the volatility spikes again. And that typically means a drop in equity markets. So I'll talk about that some more in just a minute. Apart from that, gold, obviously as a haven asset, has been pulling back and actually had one day where it saw quite a big dip and pushed down below 1450. So that's the current support in gold. Oil is still a bit choppy, and euro not quite as decisive as the British pound has been. So now I'm going to talk about the economic calendar and those events and highlight those things I've mentioned and a couple of other items. So we do have the minutes from the latest RBA policy meeting. Actually, many people were expecting a cut there. We never got it. We got a pause. So we're obviously looking to see what the RBA have to say for themselves in that. Japan, it's in a bit of a malaise again. Inflation is low, but we've got trade balance data next week. So obviously it's a big exporting nation. We'll be watching that. We've got those FOMC minutes, which I'll talk about in just a minute. And we also have machine orders from Japan. We've got that OECD Economic Outlook. And then I would lastly just point out to the market Eurozone manufacturing and services PMIs that are coming out towards the end of the week. So let's start up with those FOMC minutes. In a way, these minutes are always slightly out of date, and this is particularly the case this time around because we've already heard from Chairman Jay Powell talking in front of Congress and the Senate about monetary policy and obviously a range of other issues. But the message from Powell was pretty clear that rates are on a pause now. The Federal Reserve have cut rates 3 times this year, and they're in a wait-and-see mode. So we've obviously had a decent run higher in equity markets, and part of that has been that the Federal Reserve have been cutting interest rates, and there's been expectations they'll keep cutting rates. So the fact that they're on pause, it's a negative for the stock market. Monetary policy is quite loose from the Fed and other central banks, so it's not a problem necessarily, but the fact that we're not getting looser and looser policy means that maybe there's room for a pullback, and we could see higher interest rates in bonds, for example. That could feed through into possibly how this volatility spikes that we've been talking about. So as far as the minutes go, the main thing that will be of interest will just to see what the other members of the board have to say, and to see if they are in full agreement with Jay Powell, who's looking for the pause. Perhaps some others are a bit more dovish, and that actually could give a bit more juice to markets. If actually they're more hawkish, it seems unlikely when inflation is this low, but if they are, that again could cause some problems for markets. And then obviously we can't go without talking about the latest in the UK election. There was quite an important development last week, so it's worth just discussing that. in that there was very firstly, there was a Remain alliance, and so the Lib Dems and Plaid Cymru and the Greens have all joined together in order to basically not take each other's votes in certain seats. For the most part in England, it will be the Liberal Democrats, in Wales, Plaid Cymru, and a couple of seats, it might be the Greens. Nigel Farage has taken the first step towards a Brexit, a Leave alliance, but the Tories have not taken a step back. So 327 seats, 17 seats, sorry, that the Tories won at the last election, they will not be contested by the Brexit Party, but ideally what you'd want to see for a Tory majority would be for the Brexit Party to stand down in seats that the Conservatives want to take from Labour, but actually the Brexit Party would be competing on all those seats. So the result could be an informal Leave alliance, but then that does beg the question, would the Conservatives ever actually join some coalition with the Brexit Party? And indeed, can the Brexit Party ever actually win a seat, which UKIP only ever won one? So still a fair bit of uncertainty out there, hence the slight pullback in the pound. But I think technically what we're possibly looking at here in both euro sterling and cable is a kind of bull flag pattern for the pound. So we've had that big surge higher, we're getting a small little steady decline, and I think we're preparing for the next big surge whenever that important piece of news comes out, potentially something again relating to this Leave alliance and the likelihood of a Conservative majority coming out at the end of this election. And I did mention at the start, I wanted to talk a bit more about volatility overall. So this is not relating to the pound or the election. This is specifically the VIX, which measures implied volatility in the S&P 500. And people have been taking short positions in VIX futures, and those short positions have hit a record high. And again, it's just the idea that if everybody's going short, or who's left to go long, eventually those shorts get squeezed. And what's happened in the past is that people have been looking at the VIX short positioning and the VIX itself for a judgment about what to do with the S&P 500. And so if the VIX spikes because these shorts all get pushed out, that could mean an inverse reaction in the S&P 500. The S&P 500 drops. And we are in a bit of a kind of rising wedge formation for those who are interested in technical analysis, and that can be bearish. So rising wedge towards those record highs, a failure at the top, and a big sharp drop lower. That's a distinct possibility here, but still our default assumption is that we get some kind of bullish trend continuation pattern, but just be wary of that possibility of that short squeeze and that resulting drop in index futures. Okay, that's about it for this week. Thank you very much for watching, and if you enjoy these videos, please make sure to follow myself and LCG on YouTube and social media.